Good evening, everyone. A very good welcome to all of you. Welcome to the IoD Finance and FinTech Group webinar about foreign exchange masterclass. Before we start, I would like to say a few words about IoD. Institute of Directors has been established in 1903. In 1906, it has received a royal charter, which means it has been instructed to provide guidance on compliance and governance to organizations. And it is the only institution in the world where you can become the chartered directors. Currently, we have over 20,000 members, and I think nearly 100,000 followers on LinkedIn. IoD takes has a great impact within the UK government, advising on the policies. My name is Yvonne Ville, and I'm the chair of the Finance and FinTech group within the Institute. Our group focuses on three pillars. Number one, connect, which means is to connecting with businesses, bringing leaders and businesses together to create better, stronger businesses, to enable collaboration, building relationships and new networks. Number two is develop, which means sharing the knowledge, learning opportunities, new ideas. And this is where our webinar, our panel discussions take place. And we like to inform our followers and our members on new technologies and new ideas and new learnings that are happening currently in the industry. Number three is into influence. So this is where we have the voice. We work with the IoD policies and the UK government on finance and fintech ecosystem. We also engage in with international embassies and assist in promoting the UK businesses abroad and vice versa, other businesses, finance and fintech related from other countries to collaborate with UK businesses. And we welcome all people of different sectors. Although this is finance and fintech group, it doesn't mean that you have to be definitely related to finance and fintech, because everyone nowadays uses financial applications. So as far as I'm concerned, you are all welcome to join and follow us. You can find us very easily on the LinkedIn group. If you just type in finance and fintech, IoD finance and fintech group, you will find. And this is where we share news, information about our events, and what's happening within the IoD Finance and FinTech Group. Right. So once again, thank you very much and welcome. And today we have a very, very exciting webinar, and we have our colleague with us, Patrick Reid, who has over 15 years experience in training foreign exchange within institutional space. He's a co-founder of FX Consultancy, Adamis principled. He's also a lecturer at the University of Cambridge, where he teaches macroeconomics to undergraduates. He's also a frequent presenter at the BBC News and is expert on central banking policy and inflation and microeconomics. Patrick, welcome to our webinars, and we are very keen to learn more about foreign exchange. So I give the mic over to you, and welcome. Thank you very much for joining us today.
Hi, Yvonne. Thank you. And I'm super excited to be on this. This is a very short, interactive, chunky masterclass on foreign exchange and some of the players, what to expect, and a bit about what we do as a company, obviously. So yeah, thanks again, Yvonne. I'm very excited. I do have my business partner, Adam, in the wings. He's gonna keep me on my toes and ask me some tricky questions later. So I'm dreading that. Not really. So he's gonna be here. And yeah, I guess all I can say is it's an honor and a privilege to be on this masterclass. So thanks again.
Thank you very much. And just for the benefit of our listeners, I'd just like to know that we will share the presentation is recorded. So we will share the recording and also the presentation after. It will take today about 45 minutes to an hour. And after that, you all will have the chance to ask any questions. So question, we'll leave it to the end. Now over to you, Patrick.
Great. Right, let's dive right in. I'm going to share you my screen. Okay. Can everyone see my deck? It's got our logo on the front deck. Can you all see that? Great. Well, look, I'm Patrick Reid. I'm co-founder of the Adamis Principle. Adam's here as well. Hi, Adam. How are you? Say
Yeah,
hello.
very well. Thanks, Patrick. Nice to
Yeah,
be here. Thanks, Yvonne, for having us.
yeah. I'm letting Adam off the hook. Adam's my business partner, and we've been in business like 7 years, and Adam's going to be chipping in, ask you some tricky questions later, but I'm going to be running this masterclass, and I just want to say thank you and welcome. You know, whatever level you are, wherever you're at in your life, hopefully this is going to give you, just going to lift the curtains of what an institutional trader is, and that's coming from someone who's an outsider who changed their career late. So we're just going to go through and let's just dive right in. If there's any questions, there's about 15 minutes after, but do pop them in the chat or whatever, and we'll endeavour to answer them if we can. So this is us, Adamis Principal. Adam, he's co-founder with myself. We offer mentoring, executive consultancy, and also recruitment. And Luke is our maths guru. He's our project analyst. We have just hired someone else, Olivia, who's not here tonight, but we are growing. We're a very much small niche FX consultancy, but we have collectively multiple decades of global institutional experience in foreign exchange. And my background's buy side, so hedge funds, futures, asset managers, they're all buy side. Adam's experience is sell side, which is banks basically, and that's us. And we are Adamis Principle. So here is an introduction to foreign exchange trading. Just before that, we are world market experts in multiple asset classes, but FX is our bread and butter. It's where we feel most comfortable. As a futures trader, I used to trade interest rates, bonds, equities, pretty much everything, commodities. But when I was starting out, I was on the Bunds desk, so that was basically German debt on the 10-year. And I cut my teeth on that, and then I started gravitating towards FX, and I found it quite exciting. The moves were bigger, and generally, when my first shop I was at, Tower Trading, the bigger traders tended to trade S&P, but also many of them traded at FX. So I thought, that's quite interesting. We do have great partnerships. Obviously, I'm a visiting lecturer at Cambridge University. We've got great trusted associates who are specialists in inflation, academically, but also on desk experience. They've had huge amounts of experience in equity derivatives, fixed income, commodities, monetary policy, and such like. So this is where we've worked basically. My old shop, if I get my highlighter, here we go. I'm still trying to get to it. There we go. Look, and it works great. That's Tower Trading Group, one of the biggest futures desks in the world. They've currently got about 200 people, traders under them. They're based on Old Broad Street in the city near the Bank of England, and that's where I cut my teeth. But obviously, I have a great association with Cambridge. It's just fantastic. But collectively, this is where we've all worked. Our trusted associates, also Adam as well. And we feel that there's this big divide, or certainly there is a slight difference between bank traders and say hedge fund traders or futures traders, and they're different roles, but we have both, and we feel that's a nice, rounded, holistic experience. All right, so I've been on the telly a bit, and that's an honor and a privilege. You know, I get asked about interest rates, inflation, central bank policy, but also some emerging market stuff as well. So I feel it's great. I mean, I'm in the best job in the world. Reuters, been in the Telegraph, and obviously BBC News. All right, so let's kick off. This is your agenda today. So we are going to, first of all, when we talk about trading and who trades it and what kind of moves each currency pair, we're going to have a section where we're going to have some live charts. Hopefully it's going to work. And if it does, it's going to be great. So we're just going to talk you through what we do as a framework to look at all the currency pairs and what are the factors that move it. Then we're going to look at some key strategies that hedge funds take with winners and losers. We're going to kind of whiz through that because what I'd like to do is use that as a kind of curious pivot for something quite special. And Yvonne, you've got something really special. You're going to mention something right at the end of this masterclass, which is great. So the third thing we're going to talk about today is why risk management is your best friend. You know, when I started, I always wanted to be the big guy, the guy who's trading big size and all this stuff. And then when I started getting experience, feeling pain, recovering, experiencing, you know, the art of grit, basically, to turn up, dust myself down, hit the desk at 6:30, ready for the bund open at 7. I realized it wasn't about the big hitters. It was about proper risk management. And I'll mention this a bit later, but an old spot trader from HSBC said, you know, you can be average at macroeconomics or macro trading, but a really good risk manager, and you'll always make money. You'll always be consistent. You won't work the other way around. So I really stuck with me. And, you know, good risk management is not boring at all. It's about knowing when to lean in and lean out of that window so you don't get your head taken off on a curve or whatever, or a tree or whatever. So the final thing I want to talk about is how trading effects has changed in the modern world, and really how it has changed, but it hasn't really. There's always been algos around, and they call it AI now. We had back in the day machine code, we had high frequency traders, we had quant black box traders, and they've always been around. And if you look at the top 10 hedge funds, for example, there's you know, and I get asked this, is AI going to take over the robots going to take over? Well, no. If you look at the top 10 hedge funds, you'll always get the human ones in the top 10. You'll get your Renaissance, your D.E. Shaws, you'll always get your Brevin Howards, you'll always get your Rockos, you get your, you know, your Tudor Jones. You know, these are the types of old more capital, you know, things like that. So there's always a place for both, and that's what I'll always say about that. So that's essentially it. Now I just have got a quick question. From 1 to 10, I'd like to ask everyone, what is your current level of knowledge of FX or trading? If you pop it in the chat, if that's possible, it can give me a really good, hopefully that number's going to increase by the end of this masterclass. It'll give me a really good idea, and we can look through some of those numbers. So 1 being the weakest knowledge and 10 being the strongest. I'm waiting to see a 10. That would be amazing. So I'll give you a few minutes to write that in. There we go. 3, we got a 2. Tanya, well done. 1 to 2. Rowley, thanks. Nick, we've got a 3. You're in the lead. Amazing. Right. Anyone else? G Singh, you're a 2. All right. I see. Okay, so pretty low. All right. Well, I'm going to try and get you up to at least a 5. Fingers crossed. I've thrown the gauntlet down now, haven't I? if I fail, they'll be like, yeah, get your coat, get a taxi home. Never mind. All right. So that is the agenda. This is what we're going to talk about now. Another caveat, it might go on over our allotted time. We've only got 45 minutes. If it does, it's okay. If you feel there's stuff in this recording, in this masterclass, you don't understand, I'm going to give you, I'll leave all my details. You can contact me directly through LinkedIn. We talk to everyone. I don't feel if you don't get something, there won't be a chance to ask a question when this is over, right? That's the thing I want to say, because it's a big subject. It's huge, right? So obviously we'll just do our best. So before we start, I want to ask you, I want to just say two things before we start on the agenda. I want to see how debt works. That basically debt is the underlying to everything in FX, in my humble opinion. And also how dollar and risk works. Now, dollar and risk as a language really is the language that all banks, hedge funds talk. It's dollar and risk. That's how they talk. It's a language that I had to learn from day one. And really, I was baffled by it, to be honest. So I'm going to teach you that, right? So with this is your very own interest rates cheat sheet, and it's something that is in very basic terms is a kind of cheat sheet for the for interest rates. Now, when interest rates rise, we don't. If you own a property and you've got a mortgage, it's not very good, right? Because you have to pay more money. Well, loads of other things get moving on an interest rate going up, and yields go higher. Yields is the money generally you get to own a bond of a company or a corporate or government, right? So the T note or the Treasury note really is the biggest. I'm just going to grab some water. And the biggest issuer of bonds, it's an IOU, and they package up a bond, throw it out to the market, and see who buys it, basically. And what they promise right now, they'll say, look, if you buy our bond, you give us some money, we give you the bond. It's very transferable, it's safe, and we'll give you about 4.5% on that each year. It's a kind of an integral part of most portfolios. It's within the fixed income space. It's it's a bond essentially, and that's what runs the US because it's debt. Now, borrowing costs go higher. The currency generally follows that yield. The reason I'm talking about bonds is interest rates, when they move higher, the bonds usually follows with its yield, and then that attracts savers, basically. There's always a but, right? The downside to this is it slows growth and inflation, and it can hurt businesses. Obviously, if things cost money, then you're not going to take out a loan. If a price of that loan goes higher, you're going to tighten your belt, right? So the key problem for central banks, central banks are between a rock and a hard place because they need to control, a mandate of sorts, and a mandate is basically a job description of, if you look at the US, it is stable prices, which is inflation, but also maximum employment. So they've got to keep people in jobs. They've got to make things not too expensive. How much is that? About 2%, basically. So essentially, they do that through lots of different ways. One of those ways is they set interest rates. So at the moment, we're around 5.3% in the US, and that is a perfect way. Sometimes not so perfect, if I'm honest. A perfect way to control yields, currency, borrowing costs, savers, and it's got to be just the right temperature, not to stunt growth, right? That's when your interest rates go higher. Now, we saw a big rise in interest rates after COVID, and it really hurt a lot of people. And it hurt a lot of traders who thought they were coming back down. I was one of them. I thought inflation would be transitory, and I was wrong. So this is generally what happens, and it underpins everything else you can see in the market. And currencies, the reason I'm saying about this, interest rates really move currencies, essentially. So what happens when the interest rates go lower? Is that good or bad? Anyone got any? Type in the chat if you say it's good or bad. Would you prefer interest rates going higher or lower? Have a little chat and see what we've got here. I'm going to carry on. Here we go. Wow, got some good Q&A here. It depends. Oh, I love it. G Singh, are you a politician by any chance? Because that is a brilliant answer. Excellent. Good stuff. Yes. That's brilliant. I love it. Okay. So the fact is, it does depend, it depends where the business cycle is, right? So interest rates go higher, you're going to hurt somebody, someone's going to be your best friend. Interest rates go lower, you're going to hurt someone else, that other person is going to be your best friend. So the reason why this is really important, because it's the yield you get off the debt you issue. And everyone needs debt, and it runs the entire globe, and traders love it, right? Leverage and debt is good, right? You heard it here first. In Wall Street, there's this saying where greed is good, and obviously, I'm not saying greed is good, but debt really means that you can spend today and pay back later, and it basically, when it gets out of hand, it's a really bad thing, but essentially it means that you can live a really good life, and you can have nice things, right? And essentially, the price of that debt is really important, because what that does is people are buying and selling that debt because everyone needs it. Now, you could be Richard Branson, you could be Warren Buffett, you could be anyone really. If you need a short-term bridge loan, you're going to need a short-term bridge loan. You can't liquefy your assets because they'll take a certain amount of time. So it's just ease, right? So why am I talking about debt? Currencies move on interest rates and also debt. So bear that in mind. All right. Now, this next section, before we start to go deeper into the agenda, is, and I'm going to kind of whiz through this, so don't worry if you don't get it. This is just something I really recommend from day one. If you're on the desk, or if you want to learn about currencies, first currency you need to really know about is the US dollar. Why is that? It's the global reserve. It's run by, it's issued by the most successful economy in the world. Now, some you might disagree, but let's just take it from me. It is the most important currency in the world, and it's very, very important. So if we can read what dollar's doing, that is important for all traders. And what I'm going to do is take you through a checklist of what I did from day one. Look at your dollars and read them. So if you get a chart, you can go from TradingView or any broker chart. They will issue you a chart. Pretty simple, and most of them are free, so you can just get up Euro dollar or Aussie dollar or whatever. Work out, get 7, we call it G7, get a bunch of them and ask yourself this: is dollar going higher or lower, right? Now, remember, the market is always trying to tell you something. All you have to do is listen, okay? I sometimes use, and I know some really good macro traders, they just look at charts all day. They just love it. They try and listen. If you look too hard, sometimes that's tricky, but all you have to do is just have a look at whether it's going higher or lower. It's really, really simple, and I like to keep it simple. All right. So this is your step-by-step instruction on how to create a dollar view, essentially. When you get your chart up, let's just say Euro dollar, which is the most heavily traded currency pair. Read from left to right. Is the price trending up or down, or is it mixed? Simple, right? I like to put on a bit of a moving average. So it comes on the second thing, above or below moving averages. Is it above or below? So if it's above, it's bullish. So people are buying it. If it's below, it's bearish. So people are selling it, right? And then generally, I like to do this. I like to look if it's going higher or lower. Is price more or less from the previous day or the previous session to get an idea? And then you put this on one time frame. I like to use daily, but then you focus on the 4 hour, which is a bit more near term. I don't like to use 5-minute charts or 4 hour charts or whatever. And we'll look at some charts. So if you're not getting the chart stuff, that's okay. And if everything points to one way, that's your dollar view, essentially. Okay. So we're going to look at some charts in a sec. This is essentially a bunch of dollars. So you've got euro. Let's just get this up. You've got euro dollar. So that's euro against dollar. There's your $1. Cable is essentially sterling against dollar. Cable is a little the name institutional trade is called sterling dollar, which is called cable. It's due to many years ago cable running under the ocean from the UK into America, basically. That's the reason. You've got dollar against yen, dollar CAD, Kiwi dollar, and finally Aussie Kiwi. Now, sorry, that should be Aussie dollar. My mistake, apologies. Now, what I'm going to do is, that's your dollar side, now your risk side. Now, can anyone say in the chat, what is the most riskiest asset there is? Have a think about it. Let me look in the chat. What would you say is the most risky? If you're holding an asset, what would be really risky? Single shares, very good, G Sing, very good. So shares are quite risky. Usually they, if the world's in a good place, stocks go higher. That's really good. You're really nailing it, G Sing. Anyone else for? What's the most risky? Okay, all right. So I would say if you look at these bad boys, these are really risky. These are risk assets. So any currency in emerging markets, any currency that involves yen, because that's quite a big mover. Oil and gold are really volatile. They're quite risky. Now, you might want to hedge that. Gold could be a bit of a hedge on inflation, but essentially it is quite risky. It moves, it's volatile. And of course, we saw huge Chinese central bank buying of gold recently, and that's just come off a bit. 10-year yield can be quite risky, but these are generally risk assets. So you've basically on one side you've got dollar, and the other side you've got risk. And generally, all banks, all hedge funds, all asset managers, all futures desks, they say 4 words to describe the entire market. Dollar firm, risk off, dollar weak, risk on. Now, when I started futures, that's what I had to learn. And I went into a quiet room and shouted it, right? It was a bit odd, but that's essentially it. Now, if you can talk in those terms, you can describe the entire market, and also any other institutional trader will talk to you because they know what you're talking about, right? Dollar firm, risk off, dollar weak, risk on. Now, I know that's quite a lot for anyone that's just, doesn't have much knowledge of trading, but essentially that is it. That describes, so debt fuels the entire thing, and everyone talks about dollar and risk, essentially. All right. So it works on all assets, dollar and risk view. All hedge funds and banks use this method. If you can talk in dollar and risk terms, as I said, any trader will talk to you, no matter how big they are. They'll give you the time of day, because for me, when I learned this, it opened up a lot of doors. And really, when you get your chart up and you get your market view, you do that way before you have macro, i.e. jobs, inflation, anything like that. You just look at the chart and you get, now dollar at the moment is quite soft. So I didn't know that because of weaker CPI, but it certainly helped. It's got even softer. But if you just look at the chart, you can see a lot of weak dollars around, scattered around, all right? All right, so here's the agenda. So I thought I'd clear up with the debt, with the dollar and risk view, and this is the agenda. Who trades it and what moves each currency pair? I would say about $6.5 or $7 trillion a day in volume gets done. Now Adam's here; he might pop in the chat to correct me if I'm wrong, or he might might say something a bit later. But essentially, most of that is done by banks. Obviously, hedge funds, asset managers hedge it. Futures desk trade a lot of it. Retail traders trade it, but pretty much the majority of that $6.5, $7 trillion a day gets traded by banks. And when you're looking at a currency pair, each currency pair or most currency pairs will have dollar attached to it. So there's obviously what moves dollar is all the US data, the inflation, jobs, non-farm payroll. Have you heard of that? GDP growth, the engine, right, in the US. All of these things move dollar. So basically moves the entire dollar complex. And, things in, say, Australia. So if you have Aussie against dollar, you're looking at China as well, not just the US, not just Australia. We're looking at China. Now, why is that? Can anyone tell me why Aussie dollar or Australian economics is important based on what China does? Can anyone tell me that in the chat? I'm going to have a look. Here we go. Oh, we've got a few more here. Please do. Close location to China. Thank you, Tanya. But do you know why? Because China's close to other. Do they trade with each other, Tanya? Do you think? Yes, they do. And what's the best thing they trade? I'm singling you out, Tanya. I'm really sorry, but you're really good. So that's why I'm doing that. Coal from Australia. Oh, that's from Rowley. Well done. It is a commodity, and I'm sure they do a bit of gold as well. But there's one massive commodity that's so important. China loves it, and they make steel out of it. Does anyone know? Lots of microchips. Tanya, I think it's South Korea with the microchips, but they do. Obviously, China's the production hub of the world. Iron ore, Nick, you get the prize. Iron ore. Now, if China stopped buying iron ore from Australia, it's going to be a massive event. It's huge. The relationship is so tight, and it's because of iron ore. Well done, Nick. That's awesome stuff. I love it. I love these answers. This is fantastic. All right. You guys know more than you're letting on. Right. Now, the final thing is, it took me quite a while to get my head around this. Risk above rates and rates above macro. Technicals define risk and macro moves markets. It's a bit of a mouthful, I know. But take this on board. Risk management should be above everything, right? And interest rates, we did the cheat sheet. That's the second bit. And that is obviously into rates. So rates then into macro, because basically most currency traders of this 6.5 to 7 trillion a day, the default is following interest rate differentials. Sounds like a long word. Different IR diffs. That's what I used to say. And often traders will say, oh, what are the diffs on that? It's basically, if you buy one currency that has a higher interest rate than another, you're getting money every day. They call that carry. In the summer, they say keep calm and carry on, right? That is the art of doing nothing, sitting back, kicking back, lighting a cigar, putting the champagne out, and picking up money every day. And that's all well and good when there's not a crisis, because that can hurt you. Because you can pick up interest rates in carry every day for like, 3 months. Happy days. You're about to get your bonus at a bank. And then in one day, it can wipe out. It can go the opposite, 40% against you. If you look at Turkey, right? If you look at Argentina, it's a different case, but similar, very volatile. The likes of Venezuela, Zimbabwe, South Africa, these are violent moves to the opposite. So you've got to be really careful. Emerging market traders are the best in the class, I think. It's my humble opinion. So the final bit of this, technical. So technical analysis, there's this whole thing about do technical analysis work? Is it macro? Is it technical? They both work. Every single institutional trader I've been mentored by, I've mentored, I've sat next to, I've been on the desk, they all use technicals. Anyone that tells you otherwise is a liar or they're delusional. Now, technicals define risk. Technicals do not move markets. Macroeconomics moves the market. And what's that? Fundamentals, it's data, right? So you need both, right? So really wrapping up the first point, who trades it and what moves each currency pair? There's a bunch of stuff. Everyone trades it. The banks do the most of it, the lion's share. And each currency in G7 or G10, which is like the top most traded currencies in developed markets, most of those currency pairs have dollar attached to it. So therefore, dollar is really important. And that means the US economy is really important, right? Get some more water. Excuse me. So who trades it? Everyone. Most lion's shares the banks. And what moves each pair? Dollar does. American economy does. And obviously a bit of an inkling on Australia. So each other currency pair, it's basically their own data, but interest rates work as well. The other thing I want to mention, now we've got the central bank meeting this week on Thursday, and I'm about to lose my voice. Essentially, what does the central bank do? Its job, it has a mandate, and basically it's a mandate is a job description, and it's responsible for monetary policy to stabilize and really encourage growth and make everything okay, money flows okay, and everyone's happy, right? It works when it works, but sometimes it doesn't. Traders look at central banks and what they do. So the Federal Reserve, which is, in my humble opinion, the most powerful central bank in the world, has to do two things, nothing else. It's called a dual mandate. That dual mandate is stable prices. What is that? Inflation. But keep inflation around 2%. Very difficult when you're in COVID. Right? Now it's getting there, right? Maximum employment. What is that? Jobs. Non-farm payroll, the mighty non-farm payroll comes out Friday, once a month, right? Unemployment's got to keep that low. And all of that, if it does the dual mandate, it's happy. Everyone's fine. And it all goes swimmingly well until it doesn't, right? So different central banks have different job descriptions. The ECB, which is the European Central Bank, that has one or a single mandate, which is CPI. The Bank of England has CPI and a bit of jobs. The Bank of Japan is a bit of growth, but also used to be getting out of deflation. Now it's kind of, normalizing inflation. Why am I telling you this? Traders look at central banks. They make a lot of money. I know two guys from Tower Trading, the biggest prop desk in the world, that only traded the Federal Reserve, the FOMC, every couple of months, They used to come in for one day, actually half a day, one night. They used to make so much money. That's all they did. So it's really super important. Currencies follow the macro, but they also follow what the central bank's doing. Because the central bank is really needs to be doing its job. All right. So the final three, so I'm looking at the time, and it's God, we've done 40 minutes already, which is fantastic. But I just want to show you some live charts as well. Now, these may not mean much, but they are strategies that some hedge funds use. So these are some of the key hedge fund strategies, winners and losers. The basis trade is the first thing I want to mention, and basis is basis points, and essentially that is 0.1% on an interest of a yield, right? And what these do is they buy one and sell the other at different and pocket the difference. It's called an arb, essentially. You buy cheap, you sell in another place the same product, a different vendor, and pick up the difference. More water. Interest rates diffs. They use that. And you know about that because I've just told you. IR diffs, interest rate differentials, yeah? So they pick up low interest and you know, they make the difference. So that they sell the low interest currency and buy the high interest currency, and they pick up that overnight. And that really is another name for that, a fancy name called carry in EM. So remember, we were talking about Turkey. Turkey was offering 24% interest in a zero interest world at the time. I think it was about 24%. That's amazing, right? I'll give you something else. If you bought Argentinian peso, you would get 60% a year interest. 60. Now I can see Adam getting a little bit upset because he knows all about Argentina. Now, the reason I'm not recommending to buy Argentinian peso, I just want to get that cleared up. I'm not buying it, so please don't. The reason they're offering 60% is it's high risk, right? You might not get your money back. So this is what you do. Some very risk lovers will do that. You know, there's always a place. And the fourth thing, event and special situations trading. So you remember Liz Truss, our esteemed short-lived Prime Minister, a couple of years ago, had a really genius plan talking about cutting taxes on borrowed money. Do you remember that? How well did that play out? So that all goes into special situations. A lot of hedge funds, they pounce on this and they will short the hell out of whatever the asset is. So they will short gilts, they will short sterling cable. So that's another thing, strategy, you know, a key strategy for hedge funds. CTA trend follow sounds fancy. It's basically following a trend. There are some funds out there that will just do a lot of algo crunching and then get on and trend it and hold it. Okay. The final thing really is scalping or high frequency trading. Now, this really was a massive thing about 10, 12 years ago. And there was a lot of books involved about quant firms like the Citadel Virtue. And they were basically getting their traders in, i.e. black boxes, close to the location or co-location, close to the exchanges. They were essentially front running the actual release and scalping the difference. And they would do it millions of times, you know, every second, basically. That has largely been ironed out, but it still goes on a little bit. All right. So those are the key strategies some hedge funds take. And let's move on to this. Why risk management is your best friend? As I mentioned before, I know average macro traders who make really good money, but I also know average risk managers who are experienced and phenomenal macro guys who do not make consistent money. I would be rather good at risk than macro. That's absolutely number one. All right. Finally, before we take a quick look at some live charts, how trading FX has changed in the modern world. We've got a huge rise from retail now. Our business did really, really well in furlough times. People want to change their careers. You know, I changed my career at 38. I've done really well. And people are, you know, 20 years ago, you chose your career path and that's it. We're finding the world today, everyone pretty much wants to trade. So, and it's so easy for people to get involved. It's difficult to get proper mentoring and proper education. And, you know, we had, I do get this quite a lot, say, has AI taken over? Are you scared about humans being like dinosaurs? Well, we've had AI in a different name. We called it quant boxes, black boxes. We called it machine code, machine readable code. 20 years ago, longer. So there's enough for everyone, you know. These are some of the big boys, D. Shaw, Citadel. That should be Virtue. Sorry about the spelling. Brevin Howard, More Capital, Rockcross Tudor. And also there is lovingly said, Mr. and Mrs. Watanabe. These are essentially Japanese retail traders who love taking risk. And they're very, very big in the market as well. These have actually really increased as well. So that's fantastic. So look, what I'm going to do now is close this and just pop in some live charts just as a quick final wrap. Here we go. If we can share, try. Can everyone see my charts? So this is what we do every day, right? So we've got a lot of these tabs. This is me. So there's euro dollar. This is euro against the dollar. And we've got various lines, bunch of things, and we're basically using them to see where there are key levels of buy and sell points. We do this through, obviously, that's the daily charts, a bit cleaner, actually. That gives you what Eurodollar's done this year, right? We're now printing 108.95. So we would probably buy at 108.65 and sell at 109.82. That's just what we do, bread and butter. And this gives you a good idea of where the market's, where this currency pair is moving and you know, technically. And we do this, we actually do it in our, look at that. That is a line and a half. So this trend line on Aussie dollar 67.52, very nice. There's been some shenanigans on Japanese yen, obviously very volatile. Do not recommend trading it if you're retail. But we do look at the charts and charts, and we look at all of this every day. Every trader in, you know, all hedge funds, asset managers, banks, they have their own charts, and they look at this every day, and they get their view and they buy and sell. That's it, essentially. Now, let me get back to my deck. So that's a little taste of the live charts, all right? And that at 3 minutes late is it. I know there's going to be a few questions, and I want to say thank you. It's short, it's punchy, and I understand that there's going to be a lot of stuff in there you hopefully get value and insights to, but be a lot of questions too. So thank you for listening, and I hope that's been valuable. Yvonne, over to you. Thank you.
Well, thank you very much, Patrick. It's very interesting. I have a sort of few questions. There's some questions sort of came a little bit earlier ahead of the webinar, so I would like to start with those first. And number one, you know, I think all of us have been sort of bombarded with different ads where, you know, people advertise, you know, be a trader, become billionaire, and it's just like a, you know, a quick road to become rich. Personally, I disagree with that. what is your view and realistic expectation for currency trading, especially for someone who is individual rather than sort of a big institution without, all the sort of machine helps and AI?
It is rubbish. You're right. So what unfortunately this industry attracts a lot of snake oil salesmen, and it also attracts downright scams as well. It's just the nature of the beast, and it plays on people's vulnerabilities and also their outweighted expectations. What I would say is, for the retail trader, you can make good money. It takes a long time. If you find the right mentor, it is difficult. There is no word of a lie. You can't make it in a month or 2 months or 3 months. Some exceptional people come to us and they hit it right out of the block. They are very few. It does take time. Personally, and I was surrounded by really experienced people. It took me at least a year to get consistent and make good money. For the retail side, I would just say, start on a demo, do your research, put in hard work, make it your passion, and the money will follow. Don't do it to be a millionaire, because you're going to fail. You really are. But do it because you have an interest in the topic, in the subject. Do it because you enjoy it. You enjoy what moves the markets, and that's the best way. But yeah, it is hard. It's a very tough job. There are successes, but put it this way: I think a couple of years ago, about 100 hedge funds failed. Now, these are people, not retail, in the institutional space, very smart, and they failed. So it tells you how difficult it is. I would say most of that failure is bad risk management, over leveraging, luck, or bad luck rather, and not letting your pride take over. So not cutting. I'll give you an example, right? I was a sterling bear into the election. We did some masterclass about what we were thinking. I was wrong. And I used my risk management not to take my pride over and go, add to a losing position, for example. And that is key. When you're wrong, you're wrong. The market is always right. So it's the ego, the proper risk management, and just give yourself enough time, and you will make it eventually.
Okay, I've got another question, which is sort of two questions in one.
Mm.
Can anyone become a trader, and is it sometimes too late, or if someone's perhaps maybe too old to learn that skill? What do you think?
Anyone can become a trader, and you're never too old. I'm living proof. Now, clients come to us, and some of them are in their 50s, some are in their 60s. You're never too old. It's coming with the right mindset, knowing that it is a passion, and it does take time to learn a skill, right? Messi puts on some football boots. It doesn't mean, they're brand new hand-stitched boots. He doesn't score goals because of those boots. They help. He takes practice on those penalties and those free kicks every day. Ronaldo does the same, right? So trading is just the same. So, absolutely, I'm living proof that it's never too late. You're never too old, and anyone can do it. At the time, I wasn't very good at mathematics. I knew very little economics, right? I was quite good at being a sponge and absorbing all of that. But at the time, I was Mr. Creative. I worked at the BBC, so I wasn't, I did DJing and all this creative stuff. And I was like, yeah, I did throw myself in. What you do need is grit. You need to be humble. You need to learn, and you need to have this stamina, because it's the long game. That's the key. So yeah, absolutely, anyone can do it. If you find the right mentor, of course, and age is just a number.
Okay, thank you, Patrick. another question, which is probably combined with, your offer. Actually, I've got some people asking us, how do they sign up? How do they find a trading for someone that just starting? And I understand that you have a very good offer for our IoD members and our followers. So, Patrick, please share with us what is the good news you'd like to share.
This is going to be great. Thanks, Yvonne. And you know what? If you enjoyed what I've just done, and if you're interested to take it further, what we're doing just for your members, just for people here, is a special, completely free 1 week with me. Essentially, we're going to lift the curtains up to what we do and give you a little insight on what we do day to day, how we get golden setups, how we trade an event, how we manage our risk, and that is key. And it will do that through a series of live shows every morning, which we call the Adamis Daily. But you'll get access to a VIP WhatsApp group, and it will be very much one-to-one, but in small groups. So whoever's here, I have never offered this before. I will never offer it again, and it's only exclusive to people on here right now. So really, this is the first and last time we're going to do that. Now, I have to say, in a few days, we're going to be opening up a little wider to our valued members on our mailing list and things like that. But at the moment, it's absolutely exclusive. So, and we only have a limited amount of places. All right. So, and it's completely free. So if you are curious, you want to know what it's all about, you can. And, you'll learn something along the way as our gift to you.
Okay, thank you, Patrick. So obviously we have our everyone that is here. We have your emails, but feel free to contact me directly, or Patrick, and we will be keen to have you. Patrick, can you tell me also, is trading risky and is it very stressful? Can anyone do it, or do you think there are some people that perhaps should stay out of trading?
Yeah. It is risky and stressful if you make it, right? So you start small and then you learn the craft, then you start to get a bit bigger. The great thing about it is the risk is set by you, not the market. So you choose what size you trade, when you trade, what currency or asset you trade. And really, that's the thing to remember. You own your own risk, right? So therefore, if you can define your own risk, you can accept it. When you accept your own risk, fear gets removed, right? Because you know what you're going to lose. So we teach robust risk management, and we're very much process-led, slowly, and you will eventually make it. So it is risky if you make it. I mean, I could lay everything I own on one trade. I'm never going to do that, and that's my fault. I could really win a lot, or win a lot, or lose a lot, and that's really what we teach. So in that sense, it's up to you, and it's not. Essentially, it's as risky as you want it to be, and stress comes perfect cousin to risk. I'm not married to the desk. I'll put in a few little orders in the morning. I'll go about my day. I was at my spa club today. I have lunch with friends. I'm going off to Poland on Saturday to meet some clients. I move around. I travel. Both Adam does as well. He sees people in the States and all that stuff. So really, the stress, probably the first year it's because you're learning a new subject. Basically, you're learning a new career. It's just not to lay on too much too quick and take it easy. So in that sense, no. So that's a bit of a convoluted answer, but really, I would say it's what you make of it.
Okay, thank you. If there are any questions from the room, please put them in the sort of chat here in the Q&A section here. Patrick, I just wanted to find out also, what would you recommend as a sort of a testing ground, any sort of testing trading application would you recommend, if any?
Yeah, so many you can get a demo account with most brokers. Now we know CMC, we know XTB, we know Velocity very well. They're great brokers, and you know there are many brokers out there. But what I would say, first of all, get a demo account. Don't put real money in, and that will be your kind of execution, your kind of demo money, and that's where you can have a little play around. And then with charts, we would recommend TradingView. Now, TradingView have a free version. If you open a demo account with, say, CMC Markets, they're UK based, they're very well respected. You could get a free demo with CMC, and you know, if you needed help with that, by the way, on the 1 week with me, completely free, we can help you setting things up as well. And then TradingView is free as well. There are adverts on that free version. If you felt you were wanting to take it further, they charge about £25 a month for non-adverts on their charts. So yeah, broker, CMC or XTB or Velocity for charts, TradingView are really good and it's free. So really doesn't really cost you not that much, if anything at all, in the very early stages.
Okay, thank you.
Just to let you know, Yvonne, sorry,
yes.
I posted the link for 1 week with me completely free in the chat. So you can click on that link, you can copy and paste it and click on another time. But I would suggest you click on that link because we're looking to launch this next week on the 22nd of July for 1 week only. So please do, if you are interested. I know you get a lot of people watching the recording later as well. That is the link. So I'll leave you with the link as well, so you can forward it to anyone who's interested.
Lovely. Thank you very much. Are there any other questions for Patrick? I'll just give it another minute. If anyone has a question, please put this in our question page. Okay. Okay. So at the moment we're just getting a thank you messages.
Thank you.
Yeah. Right. So looks like there are no questions. I can't see any. Oh, hold on.
Oh, Julian Crane.
Okay. How much time? Yeah. How much time would you need to allocate for 1 week with Patrick? Okay.
Yeah. So we have the Adamis Daily, which is about half an hour every morning. We would recommend you try and attend as many as you can. We send the recording after the show, and that will give a chance for us to talk, basically. And then in addition to that, that will kind of lift the curtains of what we do. So that's Monday to Friday. We would say at least try and turn up to at least 2 or 3 of those and watch all of the recordings. In addition to that, book a half-hour chat with me, and that is only me. So that would be just to get to know you, where you're at, and maximize the experience, and that's it. That's all you have to do.
Lovely.
Julian.
Thank you. If there are any other questions, and so feel free to email us maybe at a later date or contact us. As I said, this session is recorded. We will also share the slides. So in sort of next few days, when the recording is ready, that will be released to all of you who registered for this webinar. We will also share that on LinkedIn. And in the meantime, if any of you has further questions, we are always here. Please do not hesitate to contact us. So for now, I'm really thankful to you, Patrick, for the opportunity and for joining us. And we have also David, who is with us from IoD, that would like to say a little bit more about our upcoming events and the wider IoD group. So David, do you want to come live? There we go. David here.
Thank you, Yvonne, and thank you, Patrick, and thank you, Adam, for all of the information this evening. It's been really interesting to hear everything that you've been able to impart to us, and thank you very much as well for the great opportunity this free week. This sounds like a great opportunity for everyone present. So thanks again. Just to let you know, I'm David. I'm the senior manager within the relationship team, based in London, but working throughout England and the rest of the UK to help IoD members get closer to the IoD itself and to benefit as much as possible from the roster of different benefits that are available to yourselves. So as Yvonne said, there are different events coming up, of course, for the rest of the year, as ever. And as you've come here via the Finance and FinTech group, I'd also like to just take an opportunity to mention, of course, Finance and FinTech is just one of 17 active groups that we have working to bring members closer to all sorts of different industries that not only focus on finance, but also through to property and built environment, education, women in business. We have a new digital group as well, and we have a couple of new ones also coming down the pipeline in the next couple of months. So please do join, have a look at the IoD.com website for more details when they become available. The events that are coming up include different director quarterly updates coming up in the next few months. We also have a number of Better Director Series events, which are national. They take place in different areas of the country. The next is to be confirmed, but it will be published a little later by September time on IoD.com as well. So stay tuned for that. And as I mentioned, with these special interest groups, these are a thorough range of different things that are going on. So in September alone, we have, I know, at least 10 different special interest groups doing 10 separate events. And in fact, the Finance and FinTech group will be teaming up with two of the other groups for an event in early September. So more information about that, as I say, on IoD.com in due course. Please do take a look and have a little explore. Finally, I'll leave you with just a direction to come to us with any queries you may have about this evening's event or about any general membership queries, whether you're a member or not. Come to memberrelations@iod.com for any of those queries to be answered. We'll be happy to help you out. Thank you.
Thank you very much, David. And once again, thank you very much, Patrick and Adam, for the splendid webinar. And thank you everyone who's joined us here today, this evening. We appreciate your attendance, and we're always here to support you and answer any questions. Once again, thank you very much, and wishing you all a very good evening. Good night.
Thank you.